Palantir just reported earnings. The market's first reaction was to focus on commercial revenue, coming in slightly below expectations. But I think most investors may be missing the bigger picture, because buried inside this report is a signal that could reshape Palantir's long-term growth story and potentially change how investors view the entire AI software sector. Hey everyone, on Deep Dive Stock Earnings. Here, we don't just look at price moves, we break down the logic and trends behind them. If you want to truly understand how the market works, make sure to like and subscribe. Let's get right into it. Let's start with the most important financial results. Palantir once again delivered a strong earnings report that exceeded Wall Street expectations. According to the company's latest results, quarterly revenue reached $884 million, representing 39% year-over-year growth and maintaining one of the fastest growth rates among major software companies. Adjusted earnings per share came in at $0.13, also beating analyst expectations. More importantly, management raised full-year guidance again and now expects annual revenue to reach approximately $3.89 billion to $3.90 billion. For a software company that has already reached meaningful scale, maintaining nearly 40% growth in today's macroeconomic environment is extremely impressive. At the same time, management repeatedly emphasized during the earnings call that demand for AI solutions continues to accelerate, particularly in the United States, where many organizations are moving beyond experimentation and into full-scale deployment. In many ways, this earnings report reflects not only Palantir's growth, but also a much larger shift occurring across the enterprise AI market. Many investors look at the revenue beat and immediately conclude that the quarter was strong. And it was. But what stands out to me is management's decision to raise guidance again, because that suggests the company is seeing something more than short-term demand. It suggests that businesses are increasingly integrating AI into their core operations. And if that trend continues, enterprise AI may still be in the very early stages of its growth cycle. Looking deeper into the business, Palantir continues demonstrating a highly balanced growth model. Its U.S. commercial business remains one of the company's strongest growth engines. More companies are adopting Palantir's artificial intelligence platform, or AIP, and integrating AI directly into real-world business workflows. At the same time, customer counts continue growing rapidly, highlighting strong demand across industries. Meanwhile, the government segment remains a major contributor to overall growth, whether it's defense, intelligence, or public sector organizations. Palantir's long-standing relationships and technical expertise continue providing a significant competitive advantage. For investors, this dual-engine growth model is extremely important. It means the company is not dependent on a single customer group or market segment. Both commercial and government customers continue generating demand, creating a more diversified and resilient business model. That diversification strengthens Palantir's long-term growth story and reduces concentration risk. A lot of headlines focused on whether one commercial revenue metric came in slightly below expectations. But when investors focus too heavily on one quarter, they can miss the bigger trend. The real story is that businesses are increasingly moving AI projects out of the testing phase and into production. And Palantir happens to be positioned right at the center of that transition. From a long-term perspective, that trend may be far more important than any single quarterly number. Beyond revenue growth, profitability may be one of the most overlooked aspects of this earnings report. Over the past year, many investors have worried that generative AI could disrupt traditional software companies and pressure existing business models. As a result, parts of the software sector have experienced significant valuation pressure. Palantir appears to be taking a very different path. The company continues delivering strong growth while simultaneously improving profitability and cash flow generation. Operating efficiency continues improving. Free cash flow remains healthy, and margins continue ranking among the strongest in the industry. These results suggest that Palantir is not a software company being disrupted by AI. Instead, it is increasingly becoming one of the few companies successfully converting AI demand into real earnings and cash flow. For investors, that distinction matters, because sustainable profitability is often just as important as growth itself. A lot of companies can tell an AI story. Far fewer companies can turn that story into actual profits and cash flow. And that's exactly what Palantir is doing. If enterprise AI adoption continues expanding, companies that combine growth with profitability are likely to receive the strongest market recognition. That's why I believe profitability is one of the most underrated highlights in this entire earnings report. If growth and profitability explain Palantir's current success, then its long-term competitive advantage may come from something else entirely: ontology. Recently, investors have worried that companies like OpenAI, Anthropic, and other foundation model providers could move further up the technology stack and potentially reduce the value of application layer software companies. But Palantir's core value has never been tied to a specific AI model. Its biggest advantage is helping organizations build a unified understanding of their data and securely connect AI systems to real business operations. For large enterprises, the biggest challenge often isn't finding an AI model. The challenge is deploying AI safely, effectively, and at scale across highly complex data environments. That's exactly what Ontology was designed to solve. It helps organizations connect data, systems, and workflows into a structure that AI can actually understand and act upon. This is one reason I believe many investors underestimate Palantir's moat. Powerful AI models are important, but companies still need a way to connect those models to decades of accumulated business data. Without a platform that links data, systems, and operational workflows together, even the most advanced AI model will struggle to create meaningful value. And that's the role Ontology is designed to play. Beyond Ontology, Palantir has another important advantage: model neutrality. The AI industry remains highly competitive. OpenAI, Anthropic, Google, and many others continue releasing increasingly powerful models. For enterprise customers, one of the biggest concerns is becoming locked into a single ecosystem. Palantir's strategy is very different. The company is not trying to become a foundation model provider. Instead, it aims to become the platform that connects businesses to whichever models are best suited for their needs. No matter which model provider leads the market in the future, Palantir can integrate those capabilities into its platform and help customers deploy them efficiently. This allows the company to focus on the application layer while avoiding the enormous costs associated with competing directly in the foundation model race. Over time, that positioning could become one of Palantir's strongest competitive advantages. The winner of the AI model race may change over time. Today it could be OpenAI, tomorrow it could be Anthropic, and years from now, it could be someone else entirely. But businesses will always need a platform that can connect data, manage workflows, and deploy AI applications. That's what makes Palantir's strategy so compelling. It doesn't need to predict who wins the model race, because regardless of who wins, Palantir wants to be one of the key platforms enterprises use to access those capabilities. Looking at the bigger picture, the largest debate surrounding Palantir today remains valuation. After several years of strong stock performance, expectations for future growth have become increasingly ambitious. However, the most important takeaway from this earnings report may not be the revenue numbers themselves. It may be the fact that Palantir is beginning to look fundamentally different from a traditional software company. Historically, software companies generated value through licenses and subscriptions. Palantir is attempting to become something much larger: a decision-making platform and data operating system for the AI era. As more organizations integrate AI into real business processes, the company's addressable market continues expanding. Of course, a higher valuation means management must continue executing and delivering growth. But based on current trends, enterprise AI adoption still appears to be in the relatively early stages. And this may be where the market is missing the bigger picture. The real question isn't a small revenue miss. It's whether Palantir is becoming a core layer of enterprise AI. If it is, the market may still be underestimating its long-term potential. So what do you think? Is Palantir the next generation of AI infrastructure? Let me know in the comments. Like and subscribe for more.